All right, we can go ahead and get started now. First and foremost, I want to thank everyone for their time today, especially Craig and Christine from Avalara. While nobody really likes talking about taxes, this is actually a very important topic. Also, as dropshipping becomes more and more popular within this particular industry, there's a lot of to know and tax laws that come around drop shipping as well too. So I asked Craig Brown, who's the point of contact for the IQ reseller team and customers, as well as Christina, who is an industry expert on taxes, to jump on here and kind of help educate and walk everyone through that could be doing drop shipping and understanding how to collect the correct taxes when you are drop shipping product from a third party source to your customer at that time. These two know taxes very, very well, a lot better than me at this point. So at this point, I'll pass it off. And I do thank you guys for your time.
Thank you for that, John. I'm going to start with sharing my screen with you guys all here. All right, so I think you could all share my screen. Let me start off by thanking everyone for your time today. Quick introduction. My name is Craig Brown. I am one of the senior sales executives here at Avalara. And like John said, I have been managing the IQ reseller partnership at Avalara going on 4 years. So odds are I might have met you in the past or had a conversation with you guys on the past. If I have not, it is a pleasure to meet you, and I do look forward to working with you. But like John said, I met with him earlier this summer. We had a conversation around all the questions that come up around drop shipping and how it could be beneficial to the IQ reseller channel. So we collabed on a date that might work for you guys' team to discuss drop shipping. So today we're going to be navigating sales tax and drop shipping and then discussing how Avalara can simplify your compliance. And just a little bit about Avalara. We've been in business since 2004, and we're a software solution company that was originally founded to automate sales tax compliance. And now through acquisitions and growth, offer over 200 products and services to streamline your business. So Avalara has significant experience in sales tax as we support over 100 countries with their sales tax, and we have locations in 4 continents. So odds are we're going to be able to support you with your sales tax needs. And just a little quick overview or agenda of today. Obviously, we're going to be discussing, what is drop shipping, and then the sales tax complexities of drop shipping, and then the resale certificates that are associated with drop shipping, and then follow it up with how Avalara supports and automates you through the drop shipping. And I actually have one of my solutions consultants on the call as well, Christine Martin, who will be helping us with some Q&A at the end. I do want to save 10+ minutes for any questions that might be on the back of your mind that you do want to discuss around drop shipping, as I do know it can be a pain topic, very difficult to keep up with, as one, tax laws change all the time, and then drop shipping is just a whole nother nuance that is brought to the table. So what is drop shipping? I'm guessing that most of us have an understanding or a high-level understanding of what drop shipping is, but just to define it, drop shipping is a retail fulfillment model where businesses sell products without holding inventory. So instead of storing items, the retailer forwards customer orders and shipping details to third-party suppliers like manufacturers and wholesalers, who then ship products directly to the customer. So this model allows sellers to operate with lower overhead, but it introduces complexities when it comes to tax compliance. Hence why we're having this conversation today. What I did was I put together a visual of a drop shipment model that I wanted to share with you all. And I'm going to pull up my little laser pointer here just so I can walk you guys through it all here. So in drop shipping, the seller doesn't hold inventory or fulfill orders directly. For our specific scenario here, a customer places an order with the retailer. So think of that as one transaction, because drop shipping is kind of broken down in 2 different transactions. So the customer places an order with the retailer, and then the retailer then places an order with the third-party supplier or drop shipper. The drop shipper then sends the products directly to the customer. So we have one transaction from customer to retailer, And then we have another transaction from retailer to supplier. And I asked John on the call before, like, hey, tell me a little bit about who's going to be on these calls today. He said that there's potential that there's going to be retailers and suppliers. So what we're going to talk about today, we're going to talk about both sides of this. If you are the retailer and you are the supplier and the implications associated with that. But I want your biggest takeaway to be from this slide or this model is that there are two different transactions happening. Like I said, I know I sound like a broken record, so I'm sorry, guys, but I want to make sure I make it clear. There's one happening from the customer to the retailer. That's one transaction. And then there's another transaction happening from the retailer to the supplier, is a different transaction. I know this is all one end product that's being shipped to a client, but when you think of it from a sales tax, when you think of it from drop shipping, we look at it from two different transactions, just to make sure that we make this presentation resonate with you all. So in drop shipping, the seller doesn't hold inventory or fulfill orders directly, like I mentioned. So instead, a customer places the order with the retailer, then the retailer then places the order with the third party or the supplier drop shipper. Now, the drop shipper sends the products directly to the customer. So this triangle, this workflow, it adds complexity because multiple parties are involved and the tax obligations depend on who has nexus and where. And I know I said triggered that word nexus here. So before we look into the complexities of sales tax and drop shipping, we need to first understand nexus as this is the foundation of sales tax. And I'm sure most of us on the call have a good understanding of this, so I just want to keep it high level. So nexus is a legal term that refers to a connection or a business has with a state that requires you to collect and remit sales tax. So it's literally your obligation, your connection to the state that requires you to collect sales tax. So if your business has nexus in a state, you are legally obligated to register there, collect the appropriate sales tax from customers, and then file returns within that jurisdiction. So there's types of nexuses that are listed on this slide, but I'm going to focus on economic nexus because drop shipping frequently triggers economic nexus if you sail into states that exceed a state's threshold. And they're typically based on either revenue or transactions. So you usually trigger nexus when you pass a certain sales revenue per year or you pass a certain number of transactions. And every state is different. So you'll hear anytime you talk to me, you're going to hear like it depends. Every state handles sales tax different. Every state has economic nexus is different. But the general rule of thumb is if you're selling $100,000 into a state per year, or you have over 200 transactions happening into a state per year, you're triggering nexus, in which then requires you to get registered to start collecting and remitting sales tax. Now that goes for.
Oh, sorry, go ahead. No, I was going to jump in. Can I give a little bit more background on this
Please do.
nexus
Please
concept?
do.
Because it's
Yes.
fascinating, at least from a tax nerd, it is.
Please
So
do. Yes.
it used to be that you had to have a physical connection, right? You had to have an office, you had to have employees, but Wayfair, an online marketplace, sued the state. There was South Dakota versus Wayfair. South Dakota sued Wayfair, and because Wayfair said, hey, I've sold all this stuff in there, but I don't have a physical presence in the state of South Dakota. And South Dakota said, doesn't matter if you don't have anybody here. You've created a presence for yourself in our state simply because of the number of transactions that you've had. This case went all the way up to the Supreme Court, and the Supreme Court ruled that economic nexus is a thing. You don't have to have a physical presence, but this concept of creating a presence just through the number of transactions or the value of transactions. And as you can imagine, a lot of the states are kind of wringing their hands saying, okay, we're just going to wait for the Supreme Court to rule on this, and then we're going to pass the laws. So, just as we expected, as soon as the Supreme Court said, yeah, economic nexus is a thing, all of the states passed their economic nexus rules. And Craig had said my word that I use all the time, and it drives everybody nuts, which is depends. And I can't say that every single state is the same because every state is a little bit different. So depends really comes in. It may be the number of transactions. It may be the number of taxable transactions. And this is this hard concept of nexus, right? Is what defines economic nexus? Is it this physical presence? Is it that I have people working on my behalf? Is it that I've created economic nexus because I've sold three things, but they total $200,000? So the background of economic nexus is pretty fascinating, and how in my career in tax, that is like the one big game-changing thing that's happened that has really thrown everybody for a loop. How are they keeping track of this? How are they identifying when they've created an obligation to collect tax?
Love it. Yeah, you sound way better than I do. So intervene anytime, Christine. But to summarize what Christine's saying, though, even if you never physically enter a state or use a warehouse there or store inventory there, reaching the threshold will require you to collect and remit sales tax. So it's not physical nexus and economic nexus. They act independently from each other. Thanks, Christine. So what I provide here, this guide I wanted to share with you guys here. And what I'll do post our webinar is I'll send you this slide here, because I think this is an important, because this guide will show you when sales tax needs to be collected for drop shipping, both on the supplier and from the seller. But I want to summarize how Nexus plays it out. And so I'm not going to go through each one of these bullets with you, but I do want to summarize it for you, because ultimately it shows who's responsible for sales tax. And like I said earlier, remember to think of drop shipping as two different transactions. You have the client purchasing from the retailer, and then you have the retailer purchasing from the supplier. Think of those independently. Don't think of it as just one transaction, because that's where you're going to get confused in all the drop shipping complexities behind it. So from the standpoint from the client purchasing from the retailer, if the retailer has nexus in the ship to state, then that retailer must charge and collect sales tax from the customer. So for example, say is your client is shipping to, you have a client in Florida that wants to purchase something from you and you're a retailer and you're registered in Florida, you have to charge that client sales tax. That's pretty straightforward. You're registered in the state that you're shipping it to, sales tax is there. But say is if you're the retailer and you're shipping it to Florida and you as the retailer, you don't have nexus in Florida, then you do not need to charge that customer sales tax, as the customer is responsible for paying use tax, which is out of your scope. It's something you don't have to worry about. So to summarize it, if your client purchases from the retailer and you have nexus in that state in which you're shipping it to, you need to charge the client sales tax, remit that, and file the payment to the state at your filing frequency.
Assuming what you're selling is taxable.
Assuming what you're selling is taxable. There's a huge caveat there, because in a lot of cases, you might not be selling a taxable good or service. Let's look at it from your other perspective. Let's look at it from the perspective of the supplier. The retailer purchases from the supplier. So if the supplier or the drop shipper, in this case, has nexus in the customer's ship to state, then the supplier will collect tax from the retailer unless the retailer has a resale certificate. I'll say that one more time. So if the supplier, so the one providing the good, the one manufacturing the good, or the wholesaler that has the end good is shipping it to the end user, but if they have nexus where they're shipping the product or service to, then they have to collect sales tax from the retailer or collect an exemption certificate or resale certificate from the retailer. So you're looking at this from two different perspectives. You're looking at it from the customer to the retailer, and then the retailer to the supplier, because their tax implications differ depending on where it's coming from. Now, but if the supplier does not have nexus in the state that they did not charge the seller or retailer sales tax certificate, they do not need one. So if the supplier does not have nexus in that state, they do not need to charge the retailer sales tax, nor do they need to collect that resale certificate, because that retailer or that supplier's obligation, they do not have nexus in that state. Christine, anything to add to that?
Going back to what you said before, think of this as two separate transactions, right? That transaction between you and your customer, do you have an obligation to charge them tax? That's the easy one, right? That is just the traditional retail model. But then you have to think about, because this impacts your margins, how much are you paying your suppliers? Have they charged you tax? Should they have charged you tax? Can you give them an exemption certificate? Don't charge me tax, I'm reselling these goods. And herein lies the complication, right? Because it could be that the state of Florida, and don't hold me to this one, there are some states that accept your home state certificate. So you may be able to give exemption certificates to your vendor, even though you're not registered in the state that something's being delivered to. That really is the complication. But if you break down what it is that you're doing into two separate transactions, that makes it so much easier. Should you be charging your customers tax? Should your suppliers be charging you tax? It's drop shipping to me is the Bermuda Triangle of sales tax. But if you break it down into these two separate, unique transactions, that makes it a little bit easier and kind of unwinds things a little bit.
Love it. Well said. That actually brings up our next point here is, well, actually, no, before then, jumping into that. So just to kind of summarize from the perspective of the sellers or retailers, even if you're not registered in the state where your customer is located, drop shipping can still create a sales tax collection requirement. So this often happens when the supplier or the manufacturer is registered in that state and ships on your behalf. So to avoid being charged by your supplier, so if you're a retailer, to avoid being charged by your supplier, you typically need, like Christine said, is to provide that resale certificate to your supplier. So in short, just because you're not registered doesn't mean you're off the hook. Dropshipping creates a unique risk for sales tax compliance that needs to be evaluated. So that kind of brings up to our next point here is, jump the gun there, is we need to understand the resale and the exemption certificate side of things. So we talked about reseller certificates. So this is something I want to spend more time on as it's a huge part of the dropshipping compliance. And just to define, a reseller exemption permits businesses to buy goods or products tax-free with the intention to resell those goods in a regular course of business. So this exemption is documented through a form called, what we call is a resale certificate, which the buyer provides the seller. So a resale certificate allows retailers to purchase goods for resale without paying sales tax.
And I want to
And
jump in and just recognize that this is a United States unique thing. These resale certificates with some provinces in Canada is just a US thing. In Canada, there's these things called input tax credits. We're not going to get into that. That's super complicated. But this resale model of the sales tax being the responsibility of the final consumer is a US sales tax transaction tax thing. Outside the United States, there's VAT, and there's VAT that's charged in every step along the way with the ability to reclaim it. The US decided to make a little bit more complicated and say, hey, let's charge sales tax on the final consumer, and people can give these exemption certificates at every point through the transaction life cycle.
love it, love it. And to emphasize, like I mentioned earlier, without a reseller certificate, if you are a retailer, without your resale certificate, your suppliers may charge you sales tax. So even if the product is being resold, that's why you need to provide that resale certificate. So coming from the customer to the retailer to the drop shipper, this sequence right here, the retailer needs to provide that resale certificate to the drop shipper, or this drop shipper is going to charge this retailer sales tax. And I'm sure all the retailers on the call do not want to pay sales tax for something they're reselling. So it's very important to have that resale certificate. And of course, there's a catch. It's not as easy as providing your resale certificate. And like Christine and I famously say, it depends because each state has its own rules for accepting resale certificates. And understanding resale certificates across all the states is just difficult. So but to bring light to it, when you buy items for resale, like through drop shipping, you usually don't pay sales tax if you provide that resale certificate. But these rules vary state by state, and not all states are going to accept your out-of-state resale certificate. As I provided on here, some states like California, New York, New Jersey, they require a resale certificate issued from within their own state, which means they will not allow you to use your out-of-state certificate. So ultimately what that means is if you have your resale certificate from Michigan, New York, New Jersey, and California will not allow you to use that certificate. They're going to make you use one of their certificates. So to avoid paying taxes unnecessarily, you may need to register in these additional states so that you can apply and provide the appropriate certificates to your suppliers.
But here is the thing. If you decide, hey, I want to register and give my suppliers a resale exemption, That then makes you responsible for collecting tax, that other transaction, right? That makes you responsible for collecting tax from your buyer.
Good
It
point.
doesn't
Yep.
get you off the hook. Just because it reduces how much you're paying your supplier and it helps your margins, you now have this obligation to begin collecting tax whenever the items that you're selling are taxable.
Thank you. Yeah, good point. And there are, going back to the exemptions, and there are a bunch of states that do accept out-of-state certificates. So you don't need to register locally and you can use your out-of-state certificate. But it's just difficulty keeping up with all the state laws because it's forever changing, identifying which states accept out-of-state, which ones don't, which one have like a caveat to it. There's just a lot of complexities when it comes to the certificates that are outside of the sales tax calc.
And I'm going to kind of pile on here. Exemption certificates have this expiration period, and Florida to me is the perfect example. The Florida resale certificate expires December 31st of every year. So every year at the beginning of the year, you're going to have to give an updated exemption certificate to your supplier that's shipping into Florida. Don't charge me Florida tax. I still have a valid ID number. So these expiration periods of how long your certificates are good for are certainly important to manage as well.
Exactly. And to summarize this, it's in your best interest or in the best interest of the retailer to know where your drop shipper or your supplier has nexus so that you could understand the resale certificate rules of that state and know when and or if you need to get registered for a resale certificate in that state as well too. So ultimately collabing with your manufacturer or your drop shipper to get a good understanding of their nexus footprint so that you can make proactive decisions to get ahead of the ball here. Does that make sense, Christine, how I mentioned that?
It does.
Okay, perfect. So then there's the drum roll for, what Avalara does or how Avalara helps through this. So what I did was I provided a few different solutions that I want to walk through. And these are Avalara's core solutions that work together to streamline and automate your tax compliance, going from your tax calculations to your exemption handling all the way to our research. So first we have Avatax, which is our cloud-based tax engine that integrates directly into IQ Reseller and calculates sales tax in real time at checkout. So this considers the latest rules, taxability of items, location-specific rates, and jurisdictional boundaries to ensure you're charging the right amount of tax every single time. So it's no manual rates, tax tables, or guesswork.
And I want to throw
And
something else in there too. So right now, I'm in South Carolina right now on vacation, and there's a back to school tax holiday. Here is the beauty of using a tax engine for your retail sales to your consumers. If anything that you're selling falls into a tax holiday, you don't have to do anything. You don't have to know just by using the Avalara service and this concept of taxability codes that Avalara has. We know what's subject to the tax holidays and which one's not. This
Mhm.
tax calculation engine, you don't have to manage rates, you don't have to manage rules. We're going to even help you with the shipping piece of things because we're validating addresses. So FedEx and UPS charge $30 every time they have to change an address. We can validate addresses, which in turn hopefully reduces shipping costs as well. So again, think of this as two separate transactions. This Avatax tax calculation piece can help calculate tax to your consumers, hopefully help you also with those shipping costs as well. But then there's that flip side on the purchase side, and I'll let Craig talk about that as well.
Yeah, definitely. So on the account payable side, we have a product called Avatax for AP, which brings the same level of automation to incoming vendor invoices. So it reviews each invoice to determine whether the sales tax charge is valid and accurate, based on the same concepts as earlier. It's based on the jurisdiction, based on the product, and based on your nexus. So this helps prevent you guys from overpaying or underpaying tax, which is obviously especially valuable when dealing in high volumes or complex purchase flows like drop shipping. And then moving to exemptions, so Avalara's exemption certificate module, or what we call ECM, it helps you handle both customer and vendor exemptions. On the customer side, it helps you collect, validate, and extol exemptions in the cloud. It ensures the right certificate is applied to the right transaction. It flags missing or expired certificates. And on the vendor side, it helps manage the resale and exemption certs you provide to your suppliers. So especially when you're making exempt purchases, this is critical in avoiding unnecessary tax charges on purchases meant for resale or exempt use. And it's especially helpful in drop shipping scenarios where exemption documentation often gets pretty complicated. And then lastly, this is my favorite. So this is our Avalara tax research. So it's an expert-driven tool set and service that provides answers on taxability. So whether you're launching new products or entering new states or dealing with complex industries, our research help tool helps you understand where your products are taxed. So this is very important as it provides you state-specific certificate laws on whether states will accept your out-of-state exemptions or not, but it also gives you jurisdiction guidance and supports your team with audit-ready documentation.
So, and let's talk about how this tax research tool can help, because again, going back to some states allow a home state certificate. I spent years in industry as a tax manager, and many times I had vendors call me and say, "Hey, you gave me a Georgia certificate, but this was being shipped to another state." And I would have to provide them information on why that Georgia certificate would suffice. Our tax research tool, you can go in and email them documentation saying, here's what the state says on accepting a home state certificate. So you can do it directly from this tax research tool. And let's say you ever get audited, it becomes this central point of contact with language that you and I can use, not the legalese that the lawyers use. It takes tax law and puts it into common language that we can all understand, that you can then share with vendors, you could share it with customers, you could use it to help defend yourself in an audit as well.
Exactly. Perfect. And I think that brings us to our Yep. That brings us to the end of the webinar. I know we were kind of up on time right here, but I did want to make sure that we answer or address any questions. So if there are questions, please feel free to put them in the chat. I have Christine and myself on the call. Hopefully that we can address any questions that come to mind, or obviously we can schedule a time to go into a more detailed call if you'd like. But yeah, if you have questions, please put them in the chat.
You were so thorough, nobody had any questions. Either that or we totally overcomplicated and people are even more confused now.
But that's the beauty of the integration with IQ Reseller and Avalara, is that it's automating a very complicated process. And as you start to sell more and more outside state lines, this will simplify the risks associated with that, because I know companies out there that have gone through an audit and have failed and got dinged, and this will help take that burden off of you and minimize the expense of that as well too.
Exactly.
Oh, I don't see any questions in the chat. Again, I appreciate both your time, and I appreciate everyone that took the time to attend this as well too. This was recorded. I will send this out in a day or two as well with Craig's information to learn more. But if there's no questions, I'll let everyone get back to their day. Thank you guys so much.
Thanks, everybody. Take care. Tax on.
Thank you.
Thanks, everyone.
Bye-bye.